You've been told your whole life that buying a house is the smartest financial decision you will ever make. Your parents told you, your bank told you, every financial advisor, every real estate agent, every government program ever created told you the same thing. Own a home. Build equity. That's how you build wealth in America. But here's what nobody told you. Right now, in 2026, buying a home will cost the average American family more of their income than at any point in the last 40 years. Not since 1985. Not since the 2008 crash. Right now, today, the worst affordability crisis in modern American history, and the people who profit from you buying are still telling you to buy. Today, we are going to look at what is actually happening in the housing market. Not the spin, not the real estate agent's pitch. The actual numbers. The actual forces, and what it actually means for your financial future. Welcome to Broke by Design. Let's start with a number that should be on the front page of every newspaper in America, but somehow isn't. The monthly mortgage payment on a median-priced American home today is approximately $2,800 per month. In 2020, that same payment was $1,400 per month. Same house, same neighborhood, same square footage, double the monthly cost, in 5 years. Think about what had to happen for that to be true. Home prices surged over 40% between 2020 and 2023, driven by pandemic-era demand, remote work migration, and institutional investors buying single-family homes at scale. Then interest rates went from near zero to above 6%, meaning even as prices plateaued, the cost of financing a home exploded. The result is a monthly payment that has doubled in 5 years, while median household income grew by roughly 20% in the same period. You didn't fall behind because you spent too much. You fell behind because the math stopped working, and the people selling homes never told you. Here's how affordability is actually measured. Economists use something called the Housing Affordability Index. It measures whether a family earning the median income can qualify for a mortgage on a median-priced home. A score of 100 means they can just barely afford it. Below 100 means they can't. Right now, that index is sitting well below 100 for most major American cities. In cities like Los Angeles, Miami, New York, and Austin, it is catastrophically below that threshold, meaning the median income family in those cities cannot afford the median-priced home. Not barely. Not squeezed. Cannot afford it. This is not a temporary blip. This is a structural collapse of housing affordability that has been building for years and accelerating since 2020. And the people who should be sounding the alarm, real estate agents, mortgage brokers, home builders, all make more money when you buy, regardless of whether buying is right for you. So, why does everyone keep telling you to buy? Because there are 3 narratives propping up the housing market right now that sound reasonable on the surface, but fall apart completely when you look at the actual data. Lie number 1, real estate always goes up. You've heard this your entire life. Real estate always appreciates. It's the safest investment you can make. Property values only go in one direction, except they don't. Between 2006 and 2012, U.S. home prices fell by over 30% nationally. In cities like Phoenix, Las Vegas, and Miami, they fell by 50% or more. Millions of Americans who bought at the peak of that cycle spent years underwater on their mortgages, owing more than their home was worth. Many lost their homes entirely. Real estate always goes up is a statement that is only true if you zoom out far enough and ignore every crash in between. In the time frame that actually matters to your financial life, the 5 to 10 years after you buy, real estate absolutely can and does go down. And right now, in 2026, with affordability at 40-year lows and economic uncertainty rising, the risk of buying at the wrong point in the cycle is not theoretical. It is real. Lie number 2, renting is throwing money away. This might be the single most financially destructive piece of advice that gets repeated as fact without anyone ever checking the math. Here's what the people saying this conveniently leave out. When you buy a home, especially in the early years of a mortgage, the overwhelming majority of your monthly payment goes to interest, not equity. On a $400,000 mortgage at 6.5% interest, in your very first payment, roughly $2,100 goes to the bank as interest, and only about $500 builds equity. That interest is gone. It builds nothing. It goes directly to the bank, and you never see it again. So the question isn't whether renting is throwing money away. The question is, how much of your mortgage payment is also throwing money away in interest? And the answer in the early years is most of it. On top of that, renters don't pay property taxes. Renters don't pay for a new roof when it leaks. Renters don't pay for a broken HVAC system, foundation repairs, or the unexpected costs that every homeowner knows are coming, but nobody budgets for properly. The true cost of home ownership, including maintenance, insurance, property taxes, and interest, is dramatically higher than the mortgage payment alone. In many markets right now, renting the equivalent home is thousands of dollars per month cheaper than buying it. That difference invested consistently over 10 years would outperform the equity built in most mortgages in those same markets. Renting is not throwing money away. Renting is sometimes the most rational financial decision you can make. Lie number 3, now is always a good time to buy. Walk into any real estate agent's office in America and tell them you're thinking about waiting to buy. They will tell you the market is about to go up. They will tell you rates are about to drop. They will tell you inventory is tight and you need to act now. They will tell you this in a rising market. They will tell you this in a falling market. They will tell you this when rates are 3%, and they will tell you this when rates are 7%. Because they get paid when you buy, not when the decision is right for you. When you buy, the incentive structure of the entire real estate industry is built around getting you to transact, not around whether that transaction is in your best financial interest. So, if the conventional wisdom is this compromised, what is actually happening in the housing market right now? 3 things. And understanding all 3 changes how you see everything. First, the lock-in effect is freezing the market. Here's something that rarely gets explained properly. Between 2020 and 2022, tens of millions of American homeowners refinanced their mortgages at rates between 2.5% and 3.5%. Historically low rates that will likely never be seen again in our lifetimes. Those homeowners are now locked in. If they sell their home and buy another one, they have to take out a new mortgage at today's rates, above 6%. Their monthly payment on the same value home would roughly double, so they're not selling. This means the supply of existing homes for sale is historically low. Not because there's a shortage of homes, but because the people who own them cannot afford to move. And low supply with sustained demand means prices stay elevated even when affordability is collapsing. The market is frozen from both sides. Sellers can't afford to sell. Buyers can't afford to buy. And in the middle, prices stay stubbornly high while the transaction volume collapses. Second, institutional investors changed the game. Between 2020 and 2024, institutional investors, hedge funds, private equity firms, and large real estate investment companies purchased single-family homes at a scale never seen before in American history. Companies like BlackRock, Invitation Homes, and others bought hundreds of thousands of starter homes, specifically the affordable entry-level properties that first-time buyers need most. They didn't buy them to sell, they bought them to rent, converting the entry-level for-sale market into a permanent rental supply while simultaneously removing those homes from the purchase market and driving up prices on what remained. The result? An entire generation of potential first-time buyers competing for a shrinking pool of affordable homes against corporations with effectively unlimited capital. It is not a fair fight, and it was not an accident. Third, the rate cut that was supposed to save the market didn't. Through 2024 and into 2025, the housing market held its breath waiting for the Federal Reserve to cut rates. The logic was simple. Lower rates mean lower mortgage payments, mean more buyers can afford to buy, mean the market loosens up. The Fed did cut rates, and mortgage rates barely moved. Why? Because mortgage rates don't follow the Fed funds rate directly. They follow the 10-year Treasury yield, and that yield stayed elevated because inflation concerns, tariff uncertainty, and global bond market dynamics kept it high. The rate cut that everyone was counting on to solve the affordability crisis delivered almost nothing. Mortgage rates in early 2026 are still sitting above 6.5%. And with inflation reaccelerating, which we covered in our last video, the path to meaningfully lower mortgage rates is not clear or near. This is the question everyone watching this video actually wants answered. Should I buy a house right now or not? And I'm going to give you a more honest answer than any real estate agent will. It depends on 4 things, and if all 4 aren't true for you right now, waiting is probably the smarter financial move. Number 1, how long are you planning to stay? The break-even point on buying versus renting in most markets right now is 7 to 10 years. That means you need to stay in the home for at least 7 years before buying actually makes more financial sense than renting would have. If there is any meaningful chance you move before that, for work, for family, for any reason, the math almost certainly favors renting. Number 2, what is your actual all-in monthly cost? Take the mortgage payment. Add property taxes, typically 1 to 2% of the home's value per year. Add homeowner's insurance. Add a maintenance budget of at least 1% of the home's value per year for repairs. Add HOA fees if applicable. That total is what buying actually costs per month. Compare it honestly to what renting the equivalent home would cost. In most major markets right now, that comparison will surprise you. Number 3. Are you buying a home or an investment? These are different decisions. If you need stability, want to customize your space, plan to stay long-term, and the all-in monthly cost is comparable to renting, buying makes sense on lifestyle grounds, even if the pure financial math is close. But if you are buying primarily because you believe the home will appreciate and make you wealthy, understand that is a bet. And right now, it is a bet being made at historically poor odds. Number 4. What does buying this home do to the rest of your financial life? This is the question nobody asks. If buying this home means you have no emergency fund, no retirement contributions, no ability to handle a job loss or unexpected expense, you have not built financial security. You have built financial fragility with a nice facade. A home is one asset. Your overall financial health is what actually determines your future. Here's the truth about the American housing market in 2026. It is not broken by accident. The lock-in effect keeping supply low, a consequence of rate policy decisions. The institutional investors crowding out first-time buyers, enabled by tax policy and regulatory decisions. The affordability crisis pricing out an entire generation, the result of decade-long choices about what to prioritize and who to protect. Every piece of conventional wisdom you have been handed about home ownership, real estate always goes up, renting is throwing money away, now is always a good time to buy, exists because it serves the interests of the people selling you something. Not because it is true. Not because it is good advice for your specific situation. Because someone profits when you believe it. That is what Broke by Design is here to expose. Every week, one system at a time. The housing market is not lying to you because it is chaotic. It is lying to you because the lie is profitable. And now you know. If this video changed how you see the housing market, subscribe. Share it with someone who is about to make a $400,000 decision based on advice from someone who gets paid when they sign. They deserve to see the real numbers first. We will see you in the next one.